So my name is Frayne Olson. I'm the crop economist and marketing specialist with NDSU Extension. Here's my contact information. So if you do have questions later on that we don't get to today, please feel free to reach out to me and I'll do my best to try and answer them. So we're going to look specifically at what's going on in the sunflower market. I'm going to do the best I can to give you that overview. As most of you know, it's relatively difficult to get good information about what's happening in some of these smaller market crops. There isn't any futures markets. The information flow gets to be a bit delayed sometimes. So I'll do my best to try and give you an idea of what's happening. So let's start at kind of the global level. I just want to give you an idea of where sunflower oil fits within kind of the global oilseed market. And so we're going to start at the global level. We're going to work down to what's happening in the US and in particular more what's happening here locally. So just to put this in context for everybody, this is the amount of production globally for oil. Now, this would be the oil itself, not necessarily the base crop or the bushels or hundredweight produced, but this would be the actual oil produced. So when we think about globally, palm oil is the largest oil seed produced, followed by soybean oil, and then rapeseed oil, which is really canola. In Europe, they still call it rapeseed. And then we get sunflower oil. And so of the top four, sunflower is still a significant amount. One of the things I do want to show or emphasize with this graphic or this table is that when you look at the production levels, the forecast for 23-24, the marketing year that we're in right now, is for very strong global production levels. So there is in the global market, there's definitely adequate supply. A couple of years ago, we did have some problems in the palm oil market. There was some issues as we came out of the pandemic with COVID. And palm oil supplies were down, which then put a really significant lift into the global markets. And of course, soybeans and rapeseed and sunflower benefited from that. We're now on the backside of that. So palm oil production globally, as well as soybean oil production globally, are increasing from last year. So there's not a shortage of competing oils in the global market. When we look at actual trade, so that's total production. Now we're looking at trade and trade flows. And it's a little easier to track exports than imports just because of the reliability of the data. Again, when we think about trade flows, palm oil is the most highly traded oil seed and globally by quite a ways. Now, I listed these in the same kind of order that we had on the production side. So even though sunflower oil is the second largest traded oil seed globally, it's still listed as number 4 because I want to leave them in kind of the same order. So palm oil by far kind of the king of the global oil seed trade, veg oil trade. Sunflower is a significant player. Soybean oil, now we're talking oil, not necessarily whole soybeans, is very similar to the sunflower oil market. When we look at who exports oil, and again, most of this, as you notice, will be European based and some in Argentina. So Ukraine, Russia are the largest exporters of oil, processed oil. Then we drop down into kind of the next or second tier, which would be Argentina, the EU, European Union, and Turkey. So obviously, what happened in the trade flows and the war going on between Ukraine and Russia has had an impact, but not as strong an impact, I think, as what some people had expected. The Ukrainians are trying to work out alternative supply routes for their oils as well as their grains, and they seem to be partially successful in that. When we look at vegetable oil prices, and again, this is global prices. I just wanted to show you an idea of what happens. We do have competition. Each of these oils do have slightly different uses. They have different production zones. They have different consumption areas. So when we think about global trade in the oilseed market, there are some unique kind of nuances to this, but the oilseeds do tend to go up and down together. So just to read this, the red line on the top would be rapeseed oil, or basically canola oil out of Rotterdam, which is the European-based one. The blue line is sunflower oil, coming out of Argentina. And then we have the green line, which is soybean oil, the oil now, not the bean, coming out of Argentina. So you can see there's some differences within the different complexes because of, again, who produces it, who consumes it. But global trade is kind of sets the tone for what happens even here in the United States. So shifting into production, I just want to, again, I'm not doing this to bash anybody or to downplay the importance of sunflowers, but I do want to just show the relative size and importance of some of these crops. So when we look at the total production of these oilseed crops, so this would be the yields per acre or total tons produced in this example. So the green bar is US soybean production, which is obviously very dominant when we look at the volumes produced. The blue bar towards the bottom is Canadian canola production. If you look very, very closely, you're going to see a little red hatch mark, which is US canola production, and right beside it is going to be US sunflower production. Now, this is all measured in metric ton. This would be coming out of the field. I'm not saying that US canola and US sunflower are not important because they certainly are. It's just when we think about what happens in the dynamics of the sunflower market specifically, we have to understand that it is really kind of being kicked around and pushed around by the other oil seeds. And so we have to keep that in the mind that sunflower has to be competitive with these other crops. So when we look at sunflower production by type, I just want to remind everybody the blue would be all US sunflower production. And again, this is in pounds, total pounds produced. The red line is oil sunflower. And then, of course, the black line is non-oil or confection sunflower. So the difference between the blue line and the red line would be that black line. And again, when we look at relative importance, the non-oil or the confection sunflowers are important. I'm not trying to downplay the importance of those, but just understand that the oil seed sunflowers are really the dominant source, and that's going to be the kind of the pricing system that we're looking at. So we're looking at relative prices. We're saying how does sunflower as an oil seed, but also sunflower as an oil compete or compare to other oil seed products. And then even in the non-oil or confection market, how does the confection market compare to the oilseed market? I'm going to come back to this slide in just a minute. Now, we don't have really accurate information, at least not from the USDA yet, on the 2023-24 estimates for consumption. So this would be how do we use up oil seeds? And so this graphic stops at 2022-23, basically the last marketing year. We don't have information for the current marketing year. That won't come out until the end of March. I tend to use the USDA numbers. I'm not going to put a lot of pressure on this simply because they're accessible, but they're also relatively consistent over time. So we can start to look at some trends that are going on. So one of the things I want you to notice, the red line is non-oil use and seed. So the seed would be obviously planting into the ground for the next crop. We have these non-oil uses, both human food as well as bird food as the kind of the residual or the extra marketplace that we're looking at. Crush still tends to be the primary marketplace, even though the volumes are a bit lower. Because on the red line, we're combining both the oil seed that goes into the bird food market as well as the confection that goes into human food or bird food market. Now I'm going to go back one slide. And so when we look at what happened production-wise last year, so I'm going to use the pointer, we had an increase in production last year, mainly because of planted acreage. I'll show you some graphics in just a minute. And we've had a bit of a downturn now. Most of that was not because of yields, national average yields or statewide yields, but mainly because we didn't seed as many acres. Okay, so when we think about the production side, we saw an increase. We came off some relatively low production, very tight stocks. We had a relatively good year last year, and now we're having kind of a more average or typical year this year. So when we think about what happens to the consumption, and as we get more supplies, as we get more available product into the marketplace, how do we try and compensate? And I just want to go back a little bit. If we look at the volume over the last probably 10 years, the volume of sunflower that goes into the crush market has been relatively stable. Last year, we had an increase because we had better production. My expectation is that we're going to see kind of a retracement or kind of a coming back to this more normal consumption rate. If you notice that the volatility or the variability in this non-oil market tends to be where we suck up or use either extra sunflower, or if we have a shortage of sunflower, there gets to be a lot of competition going on between the crushers as well as the bird food market. So if we have extra production, we tend to try and push that through these non-oil uses because there are limits to the amount of extra oil that we can push through the crushing, and partially because of capacity constraints, but also partially because of the competing oil seeds. So when we look at sunflower planted acreage, so this is planted acreage by state. This goes back into 2012. The blue on the very bottom, that bright blue, is North Dakota. The green is South Dakota. So you can see from a planted acreage standpoint, the Dakotas tend to be the dominant source for plantings. And obviously they have to compete profitability wise with the other crops we grow within the region. We do have several other states that do have acreage of sunflower, but they're relatively small compared to what's going on in North Dakota, South Dakota. So what happens in our area, what happens in our region does have an impact on pricing, as well as the available supplies. Now, when we look at total production, so now we're taking acreage and yields together. The red line is North Dakota. This darker blue line is South Dakota. You can see again, North Dakota, South Dakota tend to be those big dominant states. This last year, we did have a slight reduction in our total pounds produced, again, mainly because of the reduction in planted acreage, which I showed you earlier on. Okay, so now we're setting ourselves up to say, well, our supplies look as though they're relatively adequate. We've got a decent crop coming in from 2023 production. We had a very large crop in 2022, and now we're looking at saying, well, how much of that carryover stocks do we need to chew through? What does that mean for not only short-term pricing, but then pricing into 2024? So let me just come back to what is our core demand base, and we think about, again, numbers for the 2023 area yet, at least not from the USDA. We are expecting both the red line and the blue line to drop off a little bit. I do also want to just comment that we don't export a lot of sunflower from the United States. Most of it, and even when you look at sunflower oil, our sunflower oil exports are relatively small. So this is really looking at a domestic market. So when we think about supplies, what's that domestic use? What's the ability of the domestic market to adjust to differing supply availability? We are expecting, again, from a crushing standpoint, that the blue line will come down something closer to what we saw historically, which will also then probably bring some of the non-oil use down as well. So let's look at price relationships. What can we use as a benchmark to say, well, what does the future bring, or what does the future look like for oilseed pricing in particular for sunflower? And this is, I did try and find, for example, in Cargill, the Cargill facility crushes both sunflower as well as canola oil. And then, so I wanted to show kind of this relationship, the pricing relationship over a longer period of time. So the black line is the spot market price for sunflowers delivered to Cargill and West Fargo. The red line is the canola futures market, adjusted to US dollars per hundredweight. And then the blue line is the Cargill canola price. So obviously the canola futures and the canola spot market price tend to follow each other very tightly, but we do tend to see kind of a similar kind of pricing pattern into the sunflower market. So again, sunflower as well as sunflower oil does compete directly with canola oil for some of our end users. Now, this year, as you notice, because of the large supplies we had from the 2022 crop year, and then I'm moving into 2023 crop year, we're seeing that price differential between what's going on in the canola market, which is blue, versus the sunflower market, which is in black, starting to widen out. And some of that, again, is because of there's a kind of a relatively stable base of oil demand. And as we get extra production, the extra production tends to have to be pushed into either the food market for human food consumption and or into the bird food market. And so how much of those markets can absorb without having prices fall? So we're seeing a little bit of this price differential between canola and sunflower widen out a little bit because of some of the carryover stocks that we've got coming in from the 2022 crop year. So looking forward, again, I just wanted to show the price relationships first at the higher level of the oilseed market. So the blue line is soybean oil futures, a very large, very liquid market representing the major competing oil that we have. The red line is the Canadian canola futures. I pulled this chart this morning at about 9 o'clock-ish or so relatively current. But you can see that on the oilseed side, from when you look at vegetable oils, there is this relatively strong relationship between what's happening in soybean oil, not soybeans, but soybean oil futures, and what happens then in canola futures. So when we look at canola, if we're using canola futures market as kind of a proxy or a general indicator of what's happening within the sunflower market, this again was pulled at about 9 o'clock this morning. This is for the March canola futures. It looks as though, I'm crossing my fingers, it looks as though from the oilseed standpoint that we may have been setting a bottom here in the marketplace. It looks like we have kind of formed a bottom. We're starting to recover a little bit. Now, there's a lot of dynamics going on in the oilseed market, especially in soybeans right now, given what's happening in South America and some of the kind of lagging U.S. soybean exports. But the canola market looks as though it's putting in a bottom here, which again should be somewhat positive then for the sunflower market prices as we move forward. So just taking a really quick look, I do want to talk a little bit about Canadian canola just as a reference point, because obviously what happens in the canola market spills over and has a pretty heavy influence on the sunflower market. And the reason I wanted to show this is that Stats Canada did come out with their forecast, at least their initial projections for the 2024-25 production season. So this is the crop that we're going to be planting in a few months. Now, based on their expectation, they're looking at a slight cutback in planted acreage from last year. They're using a trend line yields. This would be kind of an average yield. And then when we start looking at consumption or usage, it looks as though they're looking at something similar to what we're seeing right now this year, a little bit of an uptick in exports. Canola exports for Canada have been a little bit slow this year. The Chinese market has been a little bit slow to develop. Looking at total consumption going back up. And so when we think about ending stocks, what's the available supplies of canola in the marketplace, which then influences sunflower prices? We're looking at basically a push, right? The current forecast coming out of Canada is to have a very similar year this year as we did last year. Now, the caution to that, of course, is that in Canada, they have some very dry conditions, in particular in Saskatchewan and parts of Alberta. So even though the acres may be seeded, we're going to be kind of their production zones are going to be living rain shower to rain shower for a while. So we'll have to wait to see what their kind of what the growing season turns out to be and what kind of yield potential they might have. When we look again at canola, in Canadian canola, I just want to talk a little bit about this crushing and crushing demand. There are several plants in Canada for crushing canola that are now coming online. They'll be coming on. Two of them will be coming online. My understanding is this fall, the fall of 2024, and there'll be another two coming online the fall of 2025, assuming the construction goes on pace. So the question people are saying is, given this extra crushing capacity, given the extra demand base for renewable diesel, which is really one of the reasons that they're looking at increasing crush capacity, where will all this canola go and how will that impact sunflower prices? Well, if these extra crush plants do come online and the crushing demand starts to increase, Canada may not be able to expand as rapidly as the crush capacity comes online, but they can steal some of those tons from the export market. Okay, so I do want to be cautious on the canola side in Canada. They can shift some of these export sales and keep them domestically to be able to supply those plants. So it's going to be kind of a race or competition now between the demand base coming from the crush sector and then the demand base and how strong the export market remains. So just to forecast ending stocks, for the hatched line here right here is the current marketing year. This is the U.S. StatCan estimates. This is the estimate for the 2024 production, which again hasn't been seeded yet. So from an ending stock standpoint, it's not that there's going to be a big reduction. We're not looking at super tight supplies unless there's some kind of production problem. Again, what happens in the canola market will spill over and have a pretty heavy influence into the soybean market. So with that, I tried to be as efficient with time as possible. Hopefully, if there are some questions, I'd be happy to try and answer those right now.